Doing?
Doing good.
Great.
Excited to see the whole candlestick thing.
Hey, I'm excited just to be able to connect because I know last week I was trying to use Facebook Live and it just wouldn't work.
Yeah, I was trying to get in there myself for quite a while, and then I saw that you're just going to reschedule for today.
Yeah, we ended up using Google Meet. One of the participants in the group gave me a call, and she had one of those Google Meet accounts, so we were able to use that.
Okay.
Unfortunately, though, it wasn't on record, so
Okay.
I will probably do that one again because that one is basically sets the foundation. A lot of people want to jump into trading, but they don't set the prerequisites up, and they end up failing.
Yeah, I've been doing this for a while. And I think there's so many ways to trade. Everybody can develop their own style.
Yeah.
But you've got to have some understanding of markets and kind of how things work.
Yeah.
Have you heard of Tom Lee?
Tom Lee, never heard of him.
Okay, if you're seeing his CNBC snippets, you'll see him on there. Asian guy. He has a service called FS Insight.
Mm-hmm.
And also Fund Strat. So what they do, they provide advice to institutions as well as individuals. The individual side is the FS Insight. I subscribe to their materials, and a couple times a day. What's that?
Repeat that name again.
F as in Frank, S as in Sam, Insight. And I can send you a link to it.
And it's Tom. The guy's name is Tom Lee.
Tom Lee, yeah.
Okay.
So they kind of hit it from two angles. Tom Lee is the macro guy. His partner Mark Newton is the technical strategist.
Okay.
And the way I've been approaching trading is from a chart reading technical standpoint.
Yeah.
But I love hearing about the macro too, because they say rising tide lifts all boats. When the market's going down, it's hard to make money. I don't care what anybody says unless you're the short king. And for me, that's just a whole different mindset.
Yeah, you have to be have a high risk tolerance for that. Do you trade options?
No, I don't. I did some years ago, like 25 years ago or so. Didn't know what I was doing. Got hurt.
Yeah, that happened.
Never went back. The way I look at options now, if I were to use them, I'd probably use them like as insurance. If I'm in a position hoping it goes up, but I want to buy some insurance going down, I'd probably get into some puts just as a protection side. But just pure option play, I know people do that. I'm just not comfortable with it.
Yeah.
Until I learn more, I think.
Yeah, we're going to talk about some of those strategies. I want to talk more about stocks first because, like you said, those options are no joke. And short selling,
No.
You better know what you're doing or you're going to lose your money.
Absolutely. Yeah.
So I say get comfortable with the stocks first, and then you'll get into some short selling and then some options on top of that. Because you're right, in the down markets, unless you know how to short sell or how to sell puts or maybe sell some covered calls, then you aren't going to make any money on the downside. But those two that I mentioned, I've set up the strategy where I don't want to go uncovered.
Okay. Yeah.
So I always, if I'm going to sell a put, I want to own that company.
Gotcha. Yeah.
And that put is going to be a way of me reducing my costs because typically they're going to come down. They're going to go up. They're going to go down. I want to catch it on the way down, even though it's in an uptrend. And that way I can reduce my costs.
Okay.
There's all kinds of tricks of the trade, like you said, and everybody's different. We want to approach this from an educational standpoint, and then the decisions are left to you.
Gotcha.
Mr. Rob, how you doing?
I'm good. How about yourself, man?
All right, I'm doing. It's good to see you.
As usual, absolutely, sir.
I was trying to let a few other people, there's only three of us in here,
Right.
uh, and I'm pretty sure you know what's going to happen. Uh, we'll,
What?
we'll get into the conversation, and then people are going to come in and they're going to miss the
Right.
whole context.
Absolutely.
But having said that, we're not going to hold you guys too long now. Let me see what time it is. I have 2:09.
Yeah.
Let me go out
Yeah.
I'm gonna stop my screen share and go out here to Facebook and see if anybody's having trouble trying to get in.
So have you started trading yet?
Who, me?
Yeah.
I've been trading for years.
Oh, okay. I didn't know that.
This is no new thing to me. I'm gonna tell you why I wanted to start this group, because let me check out here first and see.
Okay. Yeah, I wish I knew that. I wish you put me on that game sooner. I
Okay, I don't see anybody out there trying to message me, so we're gonna go ahead and get started, because I don't want to. This is being recorded anyway, so I hope you guys don't mind the recording, because I did
oh no, I'm good.
post it in the group. So it looks like we have Michelle coming in, so she's right on time. Go ahead and share my screen so I can start this presentation.
Hello.
Hello,
Hello.
Michelle. How's it going?
Pretty good. How are you all?
All right.
So sorry for being late.
No problem. No problem. We were trying to wait a little bit to have people come in, but we're going to go ahead and start, because I have a lot of information to cover, and I don't want to keep you guys too long. Michelle, this is being recorded. I hope you don't mind that.
No, that's fine.
Okay. All right. Can you guys see my PowerPoint?
Learning about candlesticks?
Yes, sir.
Yes.
Okay, so we're going to go ahead and start. And I wanted to start here because, to me, candlesticks are the beginning of what we refer to as price action. Okay, I'm going to define that later, but basically, price action is identified in a candlestick, as well as some other things that we're going to learn about today. All right, here's what we're going
Hey,
to
Marlon.
Yes, sir.
I'm not sure if you have any control over it, but you sound kind of distorted.
And you're right. I don't know if I have any control over that. I don't have my phone turned on. What does it sound like?
It just sounds distorted, so some of your words aren't really that clear. And I know when you and George were talking, he was way clearer, and yeah, it just sounds distorted.
Okay. George, is that the same? Are you picking up on the same thing?
He's
Or
on mute.
Or Michelle?
I'm not experiencing that. There is a little like kind of like a buzz like, but I can hear you.
Yeah, that's what we can hear you, but that what she's referring to is the distortion. But it's cool.
Okay, well, hopefully it goes away. I don't know. I can't hear anything on my end, but of course.
Right.
Am I back in? I tried to unmute.
You are now.
Okay, thank you.
Okay. All right, here, before I get into the discussion about candlesticks, I first need to talk about price action with trends, how to identify trends. I'm also going to talk about support and resistance. Then we're going to go into candlesticks, the importance of candlestick patterns, common candlestick patterns, common multi-candlestick patterns, interpreting candlestick patterns and context. We're going to talk about their limitations. And then as an extra, I want to introduce you guys to an AI stock that I am long on, or should I say will be long on when the trading day comes around, which is going to be on Tuesday. And I'm going to be all in. I'm going to introduce you to some information that I subscribe to that allows me to pick up on these companies before they get to the market, okay?
Okay.
Then we're going to
Gotcha.
have a question and answer period. Then we're going to conclude the presentation, okay? All right. You are often going to hear this term price action. It's just the movement of a financial asset over time. For us, it is going to be a stock or a share. They share the same name. So sometimes you'll hear people say stock, sometimes you'll hear people say share. And it's a key part of technical analysis, which we will cover in a later meeting, and is used by traders to make decisions about when to buy or sell. We do not want to be in a position of buying a share or stock at any moment. We want to buy it at the most opportune moment, and that is going to be the moment in which we are going to get the most bang out of our buck. And the same is true for selling. We do not want to get caught in the buying of security when it is in an uptrend and approaching an over bought level. We don't want to get caught in that. And so down the road, we're going to show you how not to get caught in that. We're going to start with that today with candlesticks. And then a trend indicates general direction of a share price over time. Daily charts, which span at least 1 year, are best to determine a trend up or down. Now, I use daily charts. I seldom use any chart lower than a daily chart. Every now and then I'll do that, but I'm mainly going to use the daily charts because to me, they provide more information. They're over a longer period of time. So what that normally means is that the noise is going to pretty much approach zero. And I'll talk about noise also. Support level is the lowest price at which a share may be considered oversold. In other words, the price has gone down to a point where it is now an opportunity to buy. Okay, this is usually an excellent time to buy if the general trend is downward. And then we have resistance level is the highest price at which a share may be considered overbought. In other words, there's an uptrend that has been taking place, and now the sellers pretty much have control. When the sellers have control, that price is going to drop. When the buyers have control, the price is going to go up. So in the uptrend, the buyers have control. On the downtrend, the sellers have control. And the candlesticks, as you're going to see shortly, are going to allow us to identify when the buyers have control and when the sellers have control. So at the resistance level, this is an excellent time to sell shares if you own them, or to short sell them. With the short sale, you anticipate the price of the stock going down, okay? And you guys, if you have questions at any time, you're available to ask those questions. Here is a chart that I did a screenshot out of my Think or Swim platform. And this is the company is Lands End. It has a ticker symbol of LE. This is a daily chart. Hold hopefully you guys can see where my cursor is pointing. You see that D up here in the panel that indicates that it is a daily chart. I also use moving averages. This blue one here is a 200-day moving average. The brown one is a 50-day, and then I also use a 20-day and a 10-day moving average. Typically, you can see a trend. Here you see the 200-day from left to right is moving upward, okay? Generally, if you want, you can just start over here to the left at the first candlestick, and then just imagine a line moving over. We can see that that is in effect. I didn't want to do that. Let's see, can I go back? Okay, and here we can see generally that the 50-day moving average is also in an uptrend, but here at the end, and I can, starting in November, looks like around November 15th, the 50-day moving average is starting to go down. We can see the same with the 20-day and the 10-day moving average right at or about, it looks like November or so, those averages tend to move down. I'm not going to spend a lot of time talking about moving averages other than they will allow you to pick up on a trend, whether or not the stock, the price action is moving upward, or if the price action is moving downward. And then where these cross to, where the candles, and I'll talk about the nomenclature of a candle in a minute, it is typically the case that when the candles are below the moving averages, you want to sell. That's a sell indicator. And if the tickers are above the moving averages, that is typically a buy indication. Like if you can see my cursor here, this would be an example of where the a buy indication. Over here as well, we can see that, and I don't have my color scheme here. Oh, yes, I do. That's the actually a 10-day moving average. But let's look here at the 50 would probably be better. Here's the I guess that's orange or brown. We can see that the 50-day moving average is above the 200-day moving average. That's a good sign, okay? The 50-day are more recent prices, okay? The 200-day is over a longer time span, and that's how you can look at these, and they smooth out. One of the beauties of the moving averages is that they smooth out all of this price action. If we were to connect the dots, we would see a lot of volatility or ranging in price. And what the averages do allow you to smooth out all of that noise, okay? They can also be seen as a support level. If I look at this 10-day over here, it can be viewed as a support level, which we mentioned later, or should I say earlier. And I want to show you an example. If we look at this portion right here, and again, I'm looking at the 10-day moving average. This is just as an example to show you here where the 10-day moving average actually acts as a resistance level, okay? I want you to think of a resistance level as the ceiling and as the support level, and the support level as the floor, okay? Many of us have probably heard of the term the glass ceiling, especially. So if the glass ceiling is like a resistance level above which it is hard for people to be promoted upward, okay? So that's one of the ways that you can think of what a resistance level is. Also, to think about having a trading platform, at least a good one, it has all the technical indicators that you need. This green line right here, I've set this up over here. It says support and resistance, and that in Thinkorswim, that's what they call an indicator or a study. And basically what it's going to be is that high point. Here we can see that lands in at a 52-week high $19.88. And you can see that the trend was downward after that. Here's a support level at 1305. And typically, if you don't want to use the indicators, what you want to do is you normally want to collect, if it's the support level, you normally want to take one of your lowest points and have it connect with at least one other point, which is typically the case. You can see that for the support level. Of course, we don't see that here for the resistance level, but that would generally be the case. Here's another resistance level here. You can see that it connects off of a high right here, and I can't show you the date there, but the green lines are resistance levels. The red lines, the dashed lines, those are support levels, okay? So you're gonna hear that term a lot. So I wanted to make sure that you were familiar with that. So hopefully you guys understand what an uptrend looks like, what a downtrend looks like. That is the broader context. In other words, that is the larger picture, okay? You do not want to look at candlesticks at a period which is very minute. You'll see some people, they'll do candlestick patterns that per minute. You'll see some people do 15 minutes. I typically don't do that. I may do it just as a matter of confirmation. I'll talk about that as well, but typically I'm going to use a daily chart. I want to see the big picture at all time. You can think of it as being a hawk in the air, able to look down and see the larger picture. So this now is the nomenclature of a candlestick. And candlesticks are a popular tool used by traders to analyze and interpret market behavior. Each candlestick represents price action over a specific period. Again, my specific period is normally going to be a daily chart. Although even with the daily chart, you're going to see that candle develop for the current day. Okay, you will see the candle develop for the current day. All of the other candles have been set, and they're typically going to be the candlestick's going to represent the opening price. Okay, let me back up. Let me talk about the body first. The candle is the body, is the thick, or the body is the thick part. Okay, these up here are referred to as wicks or shadows. Wicks or shadows. Again, we're thinking candlesticks. The one at the top represents the high price for me, it would be today. Okay, if you're doing smaller increments, it would be the high price during that smaller increment. Say if it was 15 minutes, it would be the high price during that 15-minute interval. This would, for the darker one is going to represent the bears. Okay, the bears are the sellers. They will drive the price down. Now, the colors are typically going to be green or red. I have yet to see white or black on any trading platform that I've used. You're typically going to see green or red. Green is for the bulls, i.e., price is going to tend upward. Red is for the bears, price is going to tend downward. Okay, the bulls are the buyers, and the bears are the sellers. Okay, so you're going to hear those terms a lot: bullish and bearish. Okay, let's go over here, look at the black one, which for us is going to be either, for this one's going to be red. How do I know that? Because the closing price is going to be below the open price, okay? I'm gonna go back to my Thinkorswim platform in a minute to show you what this would look like on the Thinkorswim platform. Okay, but you know you're looking at a bear if the color is red. Okay, in that case, the opening price is going to be the top of the candle. The closing price is going to be the bottom of the candle, and of course, the wick at the bottom is the lowest price during that time interval. Okay, so this one over here is the bears, the black one. This one over here are the bulls. With the bulls, you can see that the open price, the closing price. You guys getting that warning on your cell phones about the weather alert?
No, I didn't see it.
Okay.
I just heard it on my on my television. I didn't hear it on my phone.
Yeah, my cell phone gives me all those alerts. I thought that was the standard where they would do that. But anyway, back to the discussion here. On the right side are the bulls. So the closing price is above the opening price. Let me slow down. Anybody has any questions on that? Because that is very important to understand that. And I think it is a good idea to take notes on that.
I just got the phone notice.
Okay. I'm gonna stop. This is so important. I'm gonna stop my share. I'll come back to it. And well, actually, I don't want to stop my share. I want to go to my. I want you guys to see my Thinkorswim. Go back.
Will you have a problem sharing your presentation?
No, I'm gonna upload it. Everything that I do, I'm gonna upload it to the group.
Okay.
So yeah, you'll have access to it.
Gotcha.
All right. Let's see.
And then we go back to Facebook Messenger to see all these links. Is that where we?
Go to the group, and it
Yeah.
should have, in the menu up there, it should have something for documents, I think, or I'll figure out somewhere to post it where, oh, they have something about links that you can post that information.
Okay.
Right. You'll make it downloadable or something?
Yeah, you guys, or it'll be stored in the cloud. You guys will be able to click on it and listen to it.
Gotcha.
Okay.
No, I mean the actual your slideshow.
Oh yeah, that I'll post it as a document.
Yeah.
In the group.
Okay.
All right, can you guys see my chart?
Yes.
Yes.
Okay, now this is more representative of what you're going to see. Now, sometimes, let me be clear now, there are different forms of candlesticks. Here in the Thinkorswim platform, you'll notice that they'll use red and green, okay? The red are fills. Notice that the greens are hollow.
Right.
Sometimes you'll see red fills and green fills, but Thinkorswim here chooses to use a red fill and a green border.
Okay.
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 So these red ones are going to represent the bears, or other words, the sellers have control, and the greens are going to represent the buyers have control. Notice that when the reds have control, look what happens to the price. It goes down, okay? At the open of the candle is the open price for that day. Here I'm on August 28th. And the open price was somewhere, actually, I could read it up here. I'm gonna point to this area here, but I'm gonna come back to that candle. Wait a minute, I was actually on this candle.
Yeah.
And I can see that the open was 1654 and the close was 1553. Okay,
Where do you see the 1654?
you have to look up in the left corner, let me see, that is the panel, let me see, that is the 1, 2, 3, the fourth panel down where it says LE 1 year, 1 day.
Okay, I think I see it. Is it right under Lands End Incorporated New?
Yeah, yeah.
Oh, okay, okay.
Right up under that. The first one is the date.
Okay, got you, got you.
And then the O is the open, the H is the high, the L is the low, and the C is the close.
Got you, got you.
Okay, so it opened at 1654. It had a high of that, and actually that was the high for the day. Notice that when the close and the high are the same, there is no wick or shadow. You guys see that?
Yeah.
Mhm.
Okay, so sometimes you're going to get candles where they have no wicks. In this case, the high and the close are the same thing.
So that's kind of like a break even.
Well, it means that the sellers had control the whole day.
Oh, okay, okay.
We're going to talk about that. You're going to see when the wick, which represents the high, that was the buyers trying to take control. Okay,
Okay.
but look at the body. You
It's
don't
long.
have, look at the low, it's a real small one. So instead of the body being near the high, it's near the low. That means that the buyers attempted to take control, but the seller said, no, boy, we got this. In other words, there were more selling going on than there was buying. Okay. All right, so here we can see. Now this is the bull right here. So this open, really you just put your cursor on it, then you go up here, right up to the fourth panel, to the upper left corner, and I can see that on that day it opened at 1594, had a high of 1728, a low of 1574, thus the little small wick that you see at the bottom. There's not a big difference between the close. Oh, wait a minute, I was on that green one.
On the green one, yeah.
Yeah, there's not a big difference between the open and the well, excuse me, the low. Where I'm at, that's not the one. I don't think, was that the one I was on? This one here?
Yeah. I think wait a minute, it started at 1594 and then 1728.
Oh, okay, okay. So here you can see that the upper wick is longer than the shorter wick.
Mhm.
Okay, so here we can see on this day the buyers had control, and the height of the wick, or excuse me, in this case, the body is a measure of the price action during that day. The larger the height, the more price action you had during that day. Let me find a long green one. Let's see.
There's one right there.
Yeah,
And there's one above it too.
yeah, here's one here. So if we go back over there, this one opened at 1597. It got up to a high of 1709, a low of 1592, and then it closed above the open at 1702. And clearly here you can see that the close was near the high.
Yeah.
Okay, that's definitely a case where the buyers had control of that day. And then as confirmation, look what happens the next 3 days.
Yeah.
The price keeps going up. You have higher closing prices. every now and then the open, because of pre-market, the open may sometimes be below the close of the previous day, but it still ends up going higher. Okay, so with the green ones, the close is the top of the candle or the top of the body. Okay, what we're going to be looking at next is trend reversals. So here we can see at least the overall context. Lands End is in an upward trend to around, and here's the date in Thinkorswim. They'll give you the dates here, around October 18th. Or really, if we want to be more precise, October 17th. And then on the 18th, look what happens.
Starts going down.
A downward trend. Okay? And it just continues from a high of 1988 to its present price, which is 1308. Okay? Anybody have any questions on that? So this is how you interpret the, or should I say, read the candlesticks. It gives you a whole lot of information. Now, what we're going to be looking at next, once we get past this nomenclature here, is how we the patterns. In other words, a group of candlesticks. Since I'm here, I want to give you some other indicators that I'm used to using, which is the MACD and the relative strength index. I'm not going to go into much detail about these, other than to tell you that these will help us to identify potential reversals. Okay? The beauty of, and people really love the RSI, the relative strength index. Notice that it has a setting of 70, and you can barely see this down the bottom. At the bottom is 30. The average is going to be 50 right in the middle. It'll go from 0 all the way up to 100. And I want you to notice where I'm pointed here, where, watch this now. This is what you call an overbought position. In other words, the price has risen, and we can see that here. The trend was upward. And when it gets above 70, it is considered overbought. Okay? Sometimes it'll stay up there, but guarantee you it's going to come back down. And clearly you can see that happen on the 17th, where clearly the price came back down because it was overbought.
Question.
Yeah.
Are these parameters that you set yourself?
No, I do not set these parameters. These are somebody smarter than me set them.
Okay.
Okay. But they work out fine. This one right here is a gotta have, that relative strength index. And later, like I said, I don't want to spend too much time on it. One of the things I like to do, and especially in my training, and since I'm a physics guy, is I'm actually going to show you guys the formulas. We're going to play with the formulas to see about how all of these things go about. Most people that are educated on these things, they just want to tell you how to use them. Okay?
Got you.
To me, I think it is important, at least for those who are like-minded, to actually understand the formula itself. Okay? Because there's something to be learned from the formula.
The analytics of it.
Yeah, you got to get down in the details of it to really understand how it works. Okay. But most of these are going to have to deal with averages instead of dealing with instantaneous values, which you're going to get when you're dealing with real-time quotes. I'm going to show you how to set your now. I'm only familiar with Thinkorswim, so any other trading platform, you're going to have to look it up, or you're going to have to call somebody. You can probably look it up on the internet, and they'll tell you how to make these settings.
Okay.
So I want to slow down a little bit, and I want to show you something here that is very important. If you're going to be This is really only going to be important if you're a day trader or like a swing trader. So I'm going to go here to setup. Move this out of the way first. I'm going to go to application settings, and I'm going to go over here to system. And I want to show you, you need to make sure, or each of us needs to make sure that we are getting quotes real time with no delay. Okay, so if I go up, I went down to system. Then I go over here to quote speed. I want you to notice that this is now set to real time with no display, no delay. But I'm going to open it up, and let me tell you where it was set when I first downloaded it. It was set here on moderate. Okay, so I was getting a delay in my quotes. Now, if I'm going to act fast, I don't want a delay. So make sure whatever trading platform that you're using, make sure that there is no delay, that you're actually getting the real-time level 2 quotes, okay? That's real important. There's some other settings too I'll show you that have to do with memory. I don't want to go out because that's, I'm assuming that many of you are going to be like beginners. If you are an active trader, have been doing it a while, if you want to talk to me offline, I can, now this only applies to Thinkorswim. Now, if you're using Thinkorswim, I can show you some other settings that'll optimize your trading experience. All right, let's, so I'm going to try to get back to my presentation. Allow OneDrive to use the channel. Let's say yes. That's importance of candlesticks. All right, candlestick patterns are formed by one or more candlesticks and can provide insights into market sentiment and potential price direction. They are broadly classified as reversal patterns. Okay, an example of that. Actually, I'm going to show you some examples, but let me just tell you, just imagine, well, actually, I just showed you one. We had one for Lands End where it had a trend which was generally upward and down all of a sudden, and then we had a reversal at a resistance level, and then it trended downward, okay? There are some candlestick patterns that will allow you to anticipate that reversal, okay? There are also some patterns that will suggest that the trend is likely to continue. I'm going to give you some links for that one. We're going to cover a few that are reversal patterns. Here's some important continuation patterns and the Maribozu, the Doji, and the spinning top. I'm not going to talk much about them. I just want you to be aware of them. I'm going to give you a link that you can use if you want to do some further study on those patterns, okay? Now, here's what some of them look like, the continuation patterns in the form of candlestick. This one in the middle, it is generally going to be these 3 candlesticks. The one in the middle, this one is, as you can see, a downward trend. We're working from left to right, is a downward trend. And then at the bottom, what we call the spinning top. Okay, notice that it has a small body and long wicks or shadows. And then you can see the confirmation. The buyers have control. Remember, the green ones represent the buyers. Those are the bulls, and they are going to drive the price up. So we got 2 confirmations where the closes, each proceeding close is higher than the preceding close, okay? Then the Maribozu, notice that it's just a thick body or candle with no wicks. It signals a bullish continuation pattern. Here you have a morning star. I think I may have one of those for you. It's small body again. In this case, small wicks as well. Spinning top is normally going to indicate a bearish reversal. Again, what we're doing is we're paying attention to the basically 3 candlesticks. One's going to signal the point of reversal. The proceeding and the preceding are going to signal a confirmation. Okay. Again, I'm not.
So, am I understanding this right? The indicator of the reversal starts with the spinning top?
Yes.
Okay.
Okay. And here's some resources again. What I can do is put these in the group.
Okay.
And you guys can study these on your own. There are also videos out there that you can find if you want to get into the nitty-gritty details, where people can actually show you these on a platform as opposed to an image. But I'll provide that so that you guys can look at that. Here's some common single candlestick patterns. And again, the only way you're going to really get to know these, you gotta study them. You got a continual study. You got to open up your platforms, look at some of the stocks that you're tracking, and just use a legend like this. Consider this a legend, and you can use this. Also, within your platforms, there are indicators that will pick these out for you. Okay, I'll show you a few examples of those where your platform can pick out single candlestick patterns and either multi-candle patterns, okay? So here we have the spinning tops. They are neutral. Now look what happens here. I want you to notice that the long wick is about the same length as the short wick, okay? That generally indicates indecision. You had just as many buyers as you had sellers. So the buyers attempted to drive the price up, the sellers attempt to drive the price down. So really what these indicate, these are a measure of indecision, okay? Other neutral positions, you'll see these dojis, and these are real strong. I want you to see the body is pretty much, the open is near the close, okay? You'll see this one here looks like a cross. These have different names. You have dragonfly, and I think the other one's called a dragon. I think, I can't remember which one is which, but that's something that you can look up. Just know that these are measures of indecision. And then here's one where the open and close are the same. You had no high and you had no low, okay? Then here's that white Marabuzu, which is a bullish sign. Notice again, there's a lot of price action there, but there's no high and no low, okay? And then a black Marabuzu is bearish, a lot of price action, no high, no low. Here you can see we have the price trending down, and then you approach a hammer. That's going to indicate a reversal. Now, I'm not sure how well you can see that, but the body's up at the top.
And a stem
you
on the
have
bottom.
The shorter wick. Now, that could be any size now.
Uh-huh.
That wick could be longer than that. I just want you to imagine what a hammer looks like, okay? Barely has, then this one, it doesn't mean it can't have a wick at the top, but that wick is normally going to be very short, okay? And then you have the confirmation to the right of that. Here we have the bulls taking charge. Now for the hanging man, I want you to take the hammer and no, I had that wrong. The hanging man is typically what you're going to get when you have, here you can see an uptrend, and then you have that what's called a hanging man at the top. It's a hammer too, but notice the color.
Yep.
It is a sign that the sellers have control, and to confirm it on the next day, the next trading period, clear enough, you have a lower low. And then on the day preceding that, or proceeding that, you have another lower low. Okay? I don't want to spend too much time with this. I just want to give you guys an indication of, I'm going to give you a few examples. I just want you to know that these exist. And what we'll do later is to take each one of these in turn and get a little bit more play with it or experience with it. Anybody have any questions on the common single candlestick patterns?
I was just looking at the hammer and then the inverted hammer down there. It looks like the wick, right, is in a different position, right, in order to give you that distinction.
Yeah, it's just the hammer turn. It's just the inverted is just the hammer turned upside down.
Gotcha. Yeah. Okay.
You're looking at the 1 second from the bottom, right?
Correct. Yeah, because they were both of them looked like they were kind of in a down pattern prior to the hammer there. But yeah, but you got a hammer upside down and a hammer right side up. Yeah.
Okay, here with this is the down pattern here with the inverted hammer.
Correct. Yes.
And then with the hanging man, you notice you have an upward trend, and
R-
then the hanging man at the top indicates the reversal.
Right.
Okay.
Yes.
Now, let me warn you, never look at a candlestick and use it to make a decision without i.e. confirmation and some other indicator.
Yeah. You know, personally, I'm with you. I like to use the MACD and relative strength too, and you know, in the decision making along with it.
Yes. Those are the main ones I like to use. I also look at volume too.
Yes, I do. I do like to look at volume too. Yeah.
Yeah. So, all right. So again, this presentation is not meant to give you, there's no way we can go into any one of these in great detail, just to make you aware that they exist. Hopefully what you get out of the day is the understand the nomenclature of a candlestick itself, and where, to me, it is the start of your decision making. It is the start of your decision making, okay?
Right.
Thing with the MACD and the relative strength index is that those are based on historical data. They're lagging price action.
Right.
So they're what happened in the past, okay? The beauty of the candlesticks is that they can give you an indication of what future direction will be. Okay?
Mm-hmm.
Are they perfect? Of course not. But hey, if we're in it, we need to have some basis at which to start our decision making, some way to confirm it, right?
Yes,
Looking
I
at
feel like we have to have a system we're working from, otherwise our emotions get in the way.
oh my God. And that's why people use money. And I'm not gonna lie to you, I was one of those people early on. I was using my instinct, didn't have any real system, hadn't set up my goals, any of that. I can guarantee you that's not the case now. I'm very detailed in how I go about setting up my trades and what my overarching strategy is going to be.
Mm-hmm.
If we have time, I'm going to talk about that as well. How I'll set up my what my overall strategy is going to be.
Okay.
All right, now here's some common multi-candlestick patterns. The hammer is one of them. And it's what is a hammer? It's a small body at the upper end of the range with a long lower wick, about twice as long in the body, little to no upper shadow. So I'm going to point to it in the slide. There's the hammer. Look at that long lower wick.
Mm-hmm.
So look where the body is at. The body is up toward the top.
At the top. Mm-hmm.
Okay. So sellers, they rule the day, but they were trying to bring that price down lower. The buyers were like, hey, we're not having it. And so that you ended up toward the top instead of the bottom, okay?
So it's interesting that it's still a down day, but the body is at the top, and then we end up with a reversal to the upside the next day.
Yes. So here we can see, let's look at the trend first. Now let's start up here at the top. We can see that the trend, now what it doesn't show you is the number. I don't know what the time period of this chart is. It may be daily, but clearly we can see here that preceding that hammer, we're in a decline.
Mm-hmm.
Okay? Now, to be honest with you, with me, I would have my moving averages here too. I'm looking at a whole lot of stuff.
Right.
As a matter of confirmation, okay? And then, sure enough, okay, you detect this. Let's say you're sitting here behind your computer, you're watching this. Let's say it's today. Let's imagine that today is a trading day.
Mm-hmm.
You'll say, ooh, the hammer exists. After a downtrend, this could be a possible reversal. So what you do is you wait to the next trading day, and you should expect to see a confirmation, which is now the buyers have control. Okay? So we should
Mm-hmm.
expect to see that close higher than it was the previous day and even the day before that.
And our MACD and relative strength may update a little bit on the chart too, showing an upward trajectory there.
And the volume down at the bottom
Mm-hmm.
is the volume. Now the line represents the average volume, so that we can see that when that hammer took place, we were above average volume in our trading.
Mm-hmm.
And notice that it's red. So
Mm-hmm.
sellers won out on that day. That's why the price was lower. Okay. Then the trend comes. So ideally, what would happen, and here's how to apply the strategy. And my assumption is that you're using a daily chart.
Yes.
Okay. I can't, if I'm looking at any chart, now this is me now, if I'm looking at any chart below a daily, I have too much noise.
Yeah, I agree.
Too much noise. I want to know what the sentiment was for that day. Okay. You ever heard the term that the indexes have all of the information priced into them?
Yes.
Even the future, they have the future priced into them. So this is just my thinking. I'm using that same thinking with the daily charts, is it has the most precise information as opposed to anything smaller than that. The hourly, 15-minute, that I don't play with those. Okay.
Yeah, I don't either. Sometimes I'll look at a weekly chart to kind of confirm, is the trend seeming like it's really starting to move on a weekly as well as a daily, but I don't go downstream to lower time frames.
Yeah. And those moving averages will give you that. A lot of people, when you see people doing these types of presentations, they'll mention the 200-day and the 50-day,
Mm-hmm.
but rarely do I hear anyone mention the 20-day and the 10-day.
Right.
So those that 20-day and the 50-day are more recent averages, right?
Mm-hmm.
We're looking at 20 days, We're going to average the last 20 days, or we'll average the last 10 days. And one of the things that you can look for is to make sure the 10-day isn't crossing below the 20-day, and that the 20-day isn't crossing below the 50-day, and that the 50-day isn't crossing below the 200-day.
Mm-hmm.
So I want to make sure that those averages, like for example, for what you were trying to do, I would want to make sure that my 10-day is above my 20-day average.
Right.
Okay. So here's how you can apply it. Okay, you're looking at your daily chart. You identify a hammer. Okay. You want to make sure you're in a downtrend. Not just any hammer, but the hammer that follows the downtrend. Then you want to wait for, then you have confirmation. Wait for the next period's candle. That's the next day, right? So you got to be patient. You got to be patient. You want to wait for the next day. And then it's confirmed. Here I can see I got a green candle as opposed to a red one. Now the buyers or the bulls are in charge. Look at that price action.
Yeah.
Man, that's pretty significant.
You know, the second day of the green candle, the second day green candle on the upside there, it has some overlap with the previous day. And it's always nice if you can kind of get in at the lower end of that price on that second day, if possible, you know.
You want to know, let me tell you, this is my experience on when that time is. You need to be in front of that computer at 9:30.
Okay.
Because listen, I follow 12 stocks. I have 12 charts up. And almost without fail is that price is either going to go up between 9:30 and then it's going to come down. And here's why, because what I'm told is that the institutional buyers, they start their buying, and that's the big boys, they start their buying at 9:30. Okay, that's what drives the price up. And I'm assuming after they're finished, then the price comes down. So you got to be patient. I'll wait, and I want to see that price come down. I can use my MACD and my relative strength index. I want to see those fall, and that'll be an indication to me that the buyers are losing momentum and a price reversal is approaching.
You know, sometimes in my experience, you know, of course, the market has different health dynamics, and depending on, you know, the overall health of the market at the time, sometimes 9:30 out of the chute, that price is really high, and then it comes down by 10 o'clock.
Yeah.
And then carries on from there. So you might get a little better pricing, you know, if you wait a half hour to 45 minutes or so.
You got to be patient.
Yeah.
You got to be patient. But the opposite is also true, too, now. I've seen some stocks, they close at one price, and it was in an uptrend, and you come in the next day pre-market, and it's below where it closed.
Right.
Okay? So, again, like you said, you got to be patient.
Another thing I've noticed, too, is if you kind of keep your head in the market, I'm not, you know, I don't just sit in front of the market, but, you know, 3:30, 3:45, if you see that the market has started to move up from where it was, it's probably some indication that it's gonna be a continuation into the next day.
Could be. To me, the candlesticks, though, are one of the things that you can use to confirm that.
Yeah, I would be using that in conjunction with the candlesticks. Yes.
All right, then again, you wait for confirmation. This could be a gap up or a long bullish candlestick. In this case, we can see we have a long candlestick. So, George, I think this is what you were saying. Enter the trade at the opening of the next trading period after the confirmation candle. So I may have to wait another day.
Right.
Some people may want to get in on this day, but I'm going to tell you from experience, man, you don't know where these prices are going.
No, you're right.
Okay. So I don't mind waiting. In other words, you have to have a mindset that a sniper has. That sniper may wait for days
hmm
before he gets the right attempt to take out his target. He'll sit in silence. Nobody will know he's there. And he will not reveal himself at all. He will sit there and he's very patient.
hmm
You have to be the same as traders. So I don't have to get in with, because what's going to happen a lot of times is you're going to get caught up in a temporary trend.
Right.
And then people are going to sell.
It's interesting there that those 3 days in a row, though, that okay, the first day that it moves up, you actually got 3 days to get in on that price action at the top of that wick on the first day.
Yeah. It's not going to always be like that, though.
No, I know.
Yeah. So, um, so you enter the trade at the opening, hopefully at the beginning, and then if you're a day trader, and this is only if you're a day trader or maybe a swing trader, you're going to set a stop loss below the lowest point of the hammer candlestick to protect your capital.
Okay.
Looking here, you want to set your stop loss. So in other words, you bought somewhere here. If you can see my cursor, you bought somewhere here.
Right.
You want to set your stop loss here, just below the close of the hammer.
Okay.
Okay.
hmm
Profit, that's up to you. But generally, the general rule is to set a profit target based on your trading strategy, or a common approach is to aim for a price equal to twice the stop loss.
Okay.
So in other words, wherever, let's say you bought it over here at some price, and you're going to subtract this closing price, you're going to get some difference.
hmm
And then you'll multiply that by 2.
Yeah, and depending on the volatility of the stock and the percentages we're dealing with between these prices, I might throw a price threshold in there where, I wouldn't want to lose more than, say, 10% or something like that.
Yeah, you don't want to lose more than, the more you lose, the more you're going to have to gain back.
Exactly.
Now, I have an equation for that I can share with you guys. But typically, and this is just up to you. Typically, my strategy is this. I have a couple. If I am in a day trading mode or a swing trade, really a swing trade, I'm gonna do a little bit of day trading, but man, my requirements for a day trade, they're not going to happen that often.
hmm
Okay, those extreme conditions have to exist for me to go into a day trade. Normally, I'm going to be a swing trader. Okay, in other words, I may buy on a Monday and sell on a Tuesday, or I may buy on a Monday and sell on a Friday.
Right.
Short trading period.
Right.
Okay. I may be comfortable with 1.23% if I want to trade 4 days a week,
hmm
because that 4 days a week, 1.23%, because it's compounded, because I'm going to put all my money back in. Whatever my gain is, I'm going to put it back at risk. And that 1.23% is going to end up being 5% for the week.
Right.
So that's one scenario. Another scenario is I may try to get 2.5%.
Okay.
And here's why. Because there are times when I was just straight greedy. And I can get away for a minute. Sometimes I would double my money,
hmm
especially with my options trades.
hmm
And then over time, you come to find out, and I didn't find out about this until recently, is that they have something called stop loss hunting.
What was stop loss? What was it?
Stop loss hunting, as in like hunting a deer or something like that.
Oh, okay. Okay.
where they're going to drive you out of your positions. And I saw it real time.
Yeah.
And I knew that it was somebody somewhere deliberately trying to drive me out of my trades. Okay. And it
Right.
happened religiously. So you can end up making a lot of money and then end up losing all of it.
Mm-hmm.
But if you shorten your time period, a day trader, I may buy at 1 o'clock and sell at 1:10
Okay.
or 1:05 if I got a gain.
Mm-hmm.
And the reason being is because I'm limiting your time to run me out of my trade.
Right.
Okay. So you can actually make a whole lot of money by not trying to hit a home run and get what, 25, 20, or more percent, and just deal with those little short percentages. You can still make a whole lot of money to that. If I were to compound 5% a week,
Mm-hmm.
52 weeks, that would end up being 1,100% for the year.
Wow. Yeah.
Okay.
Yeah.
Now, am
Yeah.
I going to get that? No, but it's a good starting point, a good goal. If I get 12 of those without incurring any losses, that's 72% for the year.
Mm.
Where are you going to find that at?
Yeah. Yeah. Nowhere.
You're hardly going to find 72% gain for the year. Let me keep track of my time here. I don't want to keep you guys too long. Here's an example of what's called a shining star, and it is going to represent a bearish reversal. Okay.
Mm-hmm.
See it right here. It occurs after an upward trend where the price is rising. And then you can see this one right here. Notice the small body, the long wick at the top.
Mm-hmm.
Yes, buyers had control, but look how high they went, and then see where they ended up closing at.
Mm-hmm.
Okay, that's an indication of a reversal. Shooting stars are most effective when they form after a series of at least 3 or more consecutive rising periods with higher highs. Okay.
Mm-hmm.
Remember the green ones, the closing price is at the top, the opening price is at the bottom. So we can see that at least 1, 2, 3. Those are all higher highs. So we call higher
Mm-hmm.
highs. So we're in an uptrend. How do we apply the strategy? Again, this is a daily chart. The longer the upper shadow and the smaller the real body, the more bearish the shooting star is. So it's this one right here, not this one, which precedes it, but this one here.
Mm-hmm. It's got the long wick. Yeah.
Yeah, with the long wick, that is the shooting star. You wait for the confirmation. Here you can see you have the red. That means the sellers are in control. And sure enough, we have declining prices, okay? Now, having said that, in terms of entry point, in this case, we might short sell the stock or sell a call option. I am not going to speak about selling calls or shorting the stock because my assumption is, well, number one, this presentation wasn't meant for that. And then number two, it's an advanced strategy. And my assumption is that many of us are not advanced traders, probably don't have a margin account, and probably aren't set up to do options. They don't want you to have a whole lot of capital in order to deal with options. Okay.
Mm-hmm.
There is a way to get around it, but generally those are for people that have a little bit more capital. But if you're interested in how to short sell, I've provided a video for you. I don't recommend it for novice traders, like I said. And if you're going to do it, have at least $5,000 in your account, because when you do options, you do not want to put all your money at risk because you're going to lose it all. typically you don't want to trade any more than say maybe 2%, 2 or 3%. You don't want to put any more than 2 or 3% of your capital at risk. Any questions on that? All right.
No.
Some other patterns that you're going to see, what's called an engulfing pattern. Here's what we have: a bullish engulfing. And clearly, if you know how to read the chart, here's one. Here's one where this is actually a futures where the euro against the US dollar, but the same decision making applies. Here we can see that this combo is pretty much trading sideways within a range, and then all of a sudden you have a decline. And then at the bottom, here's what you're going to have, what's called a, notice that you have a shorter body, and then the longer body proceeding it. And notice that the longer body engulfs the shorter body.
Mm-hmm.
Okay, that's an indication of a reversal as well. And I'm talking about just the bodies, okay?
Mm-hmm.
That's just the candle part. Notice that the sellers have control at the red one.
Mm-hmm.
And then right after that, it is engulfed by the buyers. So they really drove that price up. And then, of course, the confirmation comes on the third day. Okay?
That's a beautiful chart right there.
Yeah. Yeah, that one, the sellers really took off. Now, I don't have volume. I can't tell you what the volume was on that, but it was probably a large volume as a means of confirmation as well. Wait for the next period's candlestick to confirm. Again, where my cursor's at, that's the confirmation. It will be a candle closing above the engulfing candle. It has to close above the engulfing candle. And for this one, you will set your stop loss just below the open of the engulfing candle. Okay, that will be down here at the bottom. Here's the engulfing candle. You're going to set your stop loss right down here just below whatever that open price is. Okay. Now, let me tell you something about, I really already said it. I don't really like to set stop losses because I noticed that every time I set a stop loss, it's going to happen.
Yeah, I think they got algorithms out there that fish for that stuff.
Oh, they do.
Yeah.
They do. And so you got to remember the broker is a moneymaker.
Yeah.
They buy and trade stocks too. Okay, to maintain liquidity. And especially with the options, when it comes to dealing with options, you're going to deal on margin. And this is them loaning you money. This is the moneymaker or your broker's loaning you money. They want to pay out the least amount of money. Okay, so there's something called max pain theory that I'll introduce you guys to later that pretty much confirms this principle of stop loss hunting. They are going to drive you out of your position, and I can tell you there have been days where I almost wanted to jump off a building because I'm in an option trade, and these guys, and it was going good. It was going good. I'm like, oh, the end of my trading period is coming. I'm going to get this money. And I was greedy at the same time. I was trying to double my money. I took $4,000 and turned it into $50,000.
Nice. In what period of time?
That was in a period of 4 weeks.
Goodness.
4 weeks, George.
Goodness.
I lost almost all of it. It was like, it was almost as though, wait a minute, somebody saw that I was making a whole lot.
Yeah.
And then they decided, bro, we're not going to let you make money like that. What is
right.
This? The price will take off right when you get out of the stop loss LOL. I don't know who that is. There's no name attached to that, so I don't know.
You know, I think again too in this though, again, this is where, you know, you're following a strategy and a system. Uh, but it's so easy for you to get off the system and go into an emotional, you know, like, hey, I just want to make all this money. Um, and some I'm speaking personally, I make a move without looking back at the charts, right? And that's where you get in trouble.
Yeah, yeah. You have to have confirmation, and you have to have other indicators. Now, here's the part that resonates with me is that that's the same thing we do in science. When these new theories come out, they have to be confirmed. Otherwise, nobody pays attention to them.
Mm-hmm.
Okay? And they have to be confirmed by some other method uh, than the method that was used to determine what the relationship was in the first place. Okay, you need some other means of confirming a pattern that you see within your data.
Okay.
That's where your technical indicators are going to come at. But I'm
Right.
going to go a step further because I don't want to lose like I've lost before. I'm also going to look at the fundamentals.
Okay.
Okay, you're a lot of the day traders and the swing traders, they may or may not look. As a matter of fact, I've never seen many of them look at fundamentals. They're just strictly looking at the charts.
Right.
I'm going a step further. I want to look at fundamentals. If it's a company that's it's not a solid company, I'm not going to mess with it.
Right.
So with this guy at the open on the third, set stop loss just below the open of the engulfing candle. Okay. Now, even novice traders can do this. You guys, for the most part, until you get a little bit more sophisticated, you're looking for these types of trends right here. Generally an uptrend, then a downtrend. You identify that pattern, in this case, an engulfing pattern, and then you should expect the uptrend. For here, all you have to do is buy. You could buy here on the third day or the fourth day. That's up to you where you want to buy, and then determine when you're going to get out, which will probably be, hey, it could be that very day.
Mm-hmm.
Now, the only thing is, when you day trade, if you day trade, if you do that more than 3 times per week, they're going to consider you a day trader,
Mm-hmm.
and they're going to change the requirements. They're going to require you to have a margin account, and they're going to require that your capital go up to 25,000. Okay, so you're not going to want to day trade without having that much capital. And if you're not an experienced trader, you shouldn't be day trading anyway.
I agree. Does Thinkorswim have scans that you can say, hey, just show me some bullish engulfing candles for the day, that kind of thing?
It has all that.
Okay.
That has is it the best platform? I don't know. There may be some better platforms. One of the things I saw the other day is that with Interactive Brokers, they have a smaller margin interest rate than does Thinkorswim. So I'm thinking about checking them out because I definitely trade on margin because, and let's say even if you're not an options trader, you still want a margin account because these trades will settle. In other words, if you buy on one day, sell on the next day, you're going to have to wait for that trade to settle before you can trade again, especially if you've used all of your capital in your account.
Mm-hmm.
Okay, if your buying power goes to zero, you're going to have to wait until that account closes out before you can trade again. If you have a margin account, you don't have to wait.
Right.
Okay, so I would recommend a margin account even for novice traders. with the hope that they don't use it
Yeah.
other than with a margin account, if you're not familiar with a margin account, let's say if you have $5,000, they'll allow you to borrow up to $2,500 over that amount. Okay, but you need to know what you're doing, because if what you're trying to do doesn't go or move in the direction that you anticipated that it would move, you may get called.
Right.
In other words, they're going to want you to put some more money into your account to meet the margin requirements. Okay, we'll talk about margins later as well. All right, let me check the time here. We're right at the end. I'm going to skip past this because I have a surprise for you guys I want to make you aware of. So I'm going to skip past this. Again, these are nothing more than other patterns. I have provided some links that you can study these patterns to figure out how to make use of them. Again, this is just a rehash of what we've already talked about. Consider the trend. We have to look at the larger picture. That's what, is there an uptrend? Is there a downtrend? We do have to pay attention to trading volumes. We'll take a look at what those scales look like as well. I did show you one. There was one example that I showed you of what trading volume looks like. Those are the what do you call those, bar graphs. And then later on, we're going to get into some technical indicators. We're going to look at moving averages, simple moving averages, exponential moving averages, relative strength index, Bollinger Bands, and there's others too, but those are some of the main ones that people are going to use to determine, to make decisions about when to enter and exit a trade. Now, are these things perfect? Of course they're not. There's a lot of subjectivity there. What one experienced trader may say, you may have another experienced trader say something totally different. They do get false signals. You're expecting an uptrend after a downtrend, and the downtrend continues. Okay? In physics, we say that there's no such thing as an exact measurement. So there is no trading tool that we can come up with, no candlestick pattern that is going to be exact. Okay? It's just a point for the start of your decision making. You must use other indicators as well before you make your decision. And then you want to have opportunity to confirm that the trend is actually moving in the direction that you anticipate that it will move. Again, context, you use that daily chart, you'll have the context. If I'm looking at a daily chart and it's downward the whole year, I'm not messing with that. Even though I could go into some positions where I could short sell, I could do that. But it's just my point, I'd rather not mess with those type of companies, because you don't know how far the bottom's going to drop.
Yeah, there's a saying out there that nothing good happens below the 200-day moving average.
There you go. There you go. All right. Now, here's the surprise. And here's what you're going to get in this group. I subscribe to reports that will give me, supposedly, the information that I need to make a decision before it gets to the general market. One of those reports is the Near Future Report. I'm also subscribed to Fools, Motley Fools, that is. They have a report. I also have a subscription with Zacks.com. And some of these tools, they're going to charge me a whole lot of money, but I'm going to offer it to the group because I understand the importance. And this is what I wanted to say at the beginning. I realized after I retired and my retirement became available to me, I said, wait a minute. This is not only retirement money, but this is capital. I thought that, hey, we live in a capitalist society. This country was set up for capitalists, and I can think of no better way for us to get capital than to invest. What I'm going to do next, in addition to this trading, I'm also going to get into residential development. Now, at least from my perspective, I would have never been able to do that without the capital, and not all of it. I'm not sitting up here telling you that I'm putting all of my capital at risk. I'm not that stupid. But even that, I'll leverage that and use that to get into residential development and make more money.
You know, we'll have to talk some on that. You know, real estate is my thing.
Well, see, that was another reason for the group, because here's what my hope is that it'll be people like you and people like me that say, wait a minute, he's right. This is capital that I've never had before, right? And we can use some of this capital to participate in other ventures, economic, community development, and all of those things. Because what I've seen over the years is that you don't have a shortage of smart people that want to participate in business, employ folks, develop their communities. The only thing they're missing is capital.
Yeah.
And when I retired, that was almost immediately made evident to me that this is how you get it, through trading. Okay.
Yeah. I got some other stuff I'm gonna introduce to you on that level too, where your own personal capital may not have to play into it at such a higher level. There's some things out there. We'll have to talk.
Yes, sir. Yes, sir. Okay.
And I got some groups that I'll kind of get you plugged into where you kind of see what I'm talking about. But you're right, you know, definite.
I'm open to that, but here's what I found in this report here, the near future report. Context. I had the privilege of participating in the .com revolution. This was around 1997, 1998, right when I started at St. Clair. And I'm going to tell you this, I was the worst professor there, because when I should have been preparing for my lessons, I was day trading. I was in my office day trading. I'd even leave the classroom and go check my accounts. Okay. And I was making a killing. I know that year I traded over 850,000. Now that doesn't mean I made that. Those are just the transactions, right? I could make $15,000. Now I could show you the statements. I can make $15,000 in a day. I can make $30,000 in 15 minutes. Hey, but then turn around and lose.
Yeah.
Right.
Well, you know, the market was in a totally different dynamic back then.
Oh, it absolutely was.
Yeah.
That's why I call it a revolution. Now,
that was right in near the beginning of .coms, wasn't it?
That was when it started. Now, I was participating in IPOs.
Yeah.
That's all I mess with. Now, had I been smart, I would have had Amazon.
Yeah.
I'd be a multi-millionaire today.
Yeah.
But at that point, I was a novice trader. Okay. But I want to introduce, so you had the .com revolution. Now, You guys cannot trust me on this one. Do not miss out on this AI revolution. It is going to dwarf any other revolution that we've ever had, and we're at
I
the
agree.
beginning of it. Okay. Now, here's I'm going to open this up. This company here. Here's what's happening with AI. Let me just give you my spiel on it. You guys are familiar now with AI. Stands for artificial intelligence. For those of us that are not familiar with it, and it really has to do with automation more than anything else. It's going to help us become more productive. I'll give you an example. I use Chat GPT to outline this presentation that you guys are looking at today.
Wow.
It took Chat GPT about 5 seconds to generate it. Now, true enough, I had to go through and add.
Give it prompts, yeah. And
I had to go through and add some stuff to it. I had to add the images. It doesn't give you images. I had to validate it. I had to switch the language up, some of the language up in a way that you guys would understand it. And I had to add some other things in there that they had missed that I thought were important. Okay? It'll do that all day.
Yeah.
This is part of what the AI revolution is about. It's about automation. We're going to see robots. We're going to see self-driving cars. You're going to see businesses automate many types of processes. I'll give you another example. Microsoft is big into it. Apple, all of your Magnificent Seven stocks, all of them are into using this artificial intelligence to increase their bottom line, their top line and their bottom line. But here's the problem. In order for it to get to the point where we're going to get, what do you call that, the Jetsons back in the day? I used to watch the Jetsons.
Oh, yeah.
In order to get that level, the problem that they are facing is that the CPUs are extremely fast. The memory is not. So the CPU sits there dormant while the memory's trying to do its thing. So the trick is to relieve the memory bottleneck. This company here, Micron, is the only high-density memory manufacturer in the United States. The other ones are the Taiwan Semiconductor Company, and there's another one, Samsung. These companies are in Korea. Okay? You guys already know what Trump's going to do, and even what Biden was doing in terms of not letting this technology get off the American shores or get in the hands of, in particular, the Chinese.
Right.
Okay? So this company here, Micron, has come up with a method to reduce the memory bottleneck, what they call the memory bottleneck. Okay? I'm not going to get into the nitty-gritty details because there's a lot of technical stuff that only tech guys would know, but I can guarantee you this. There's a lot of high hopes for this, and it is so big that the government, the U.S. government, watch this. I'm going to click, I am going to show you this. You guys have heard of the CHIPS Act, right?
Right.
Okay. Biden-Harris administration, U.S. Majority Leader Schumer announced, look at this, $6.1 billion in CHIPS and Science Act funding for historic plan investment in domestic, leading edge, watch this, memory manufacturing. Micron is the only company. Intel, out of the picture.
Micron's been a while for around for a minute too, haven't they?
They make DRAM. If you've ever familiar with DRAM, dynamic random access memory.
Yeah, yeah.
That's what we're talking about. They make those types of chips. They make NAND chips, and now they're coming out with another chip that is going to eliminate, or should I say, allow the memory to keep up with the CPUs.
Wow.
That's going to change the whole game.
Yeah.
Okay, so, and you're going to see Tesla coming out with robo-taxi maybe this year. Okay,
Mm-hmm.
these are huge. This Micron has all of them as their clients because, like I said, they're the only one that develops these type of chips. They're right at about $100 right now. I'm going
Yeah.
all in on it.
Chart looks good too.
I want to put up at least 10 grand on it. And that's going to be one I'm going to hold. Okay. So
Mm-hmm.
here you can see the CHIPS Act, Science Act grants of 6.1 million will support Micron's plan to invest. Now look how much they're putting in it.
50 billion.
50 billion in gross capital expenditures for U.S. domestic leading edge memory manufacturing, starting now through 2030. Okay.
Mm-hmm.
They're also, and it may mention it in here, they're also going to give them loans. The United States isn't playing around with this
Right.
because of the threat that China, China's trying to do the same thing.
Mm-hmm.
So this is the gem that I wanted to provide to you guys that I think is under the radar. Okay, just to make you aware of it. I'm in it for the long haul. And at this point, because we're a little bit over the time here, are there any questions?
No.
No, this has been good.
I appreciate you taking your time, man. I'm happy I was a part of this, man. I'm a little excited here.
I see my staffing buddy on the line. How you snuck in on me? What did you think of the presentation? Now I know you're already an investor now, so don't brag too much because I know you're already deep in it. He's one of my Marine Corps buddies as well. Michelle, what did you think?
First of all, little overload, so I'm going to have to kind of get through it. But great information. It answered several questions that I had, and I have a bit more understanding than I did. So I just appreciate you. I appreciate your time. I appreciate your talent. Appreciate your willingness to share. I really appreciate this. This is very much beneficial.
Well, thank you. And I understand the importance of it because of what I said earlier. Robert, I'm pretty sure out of all of you here, you probably know a little bit more about me than most. I ran a nonprofit. Matter of fact, I still have it.
Yeah.
I'm not doing much with it, but I've always been in the community and economic development for the last 20 years. And one of the things I saw that, hey, you can have as much knowledge as you want to. I'm pretty conversant in economics and many other things because I love to learn. But if you don't have any capital, people aren't paying attention to you.
Yeah, you're right.
Us in particular, if you don't have it, and I'm seeing things that, because I'm very observant, I'm looking at what the larger community is doing, and I'm wondering to myself, why aren't we doing any of that?
Right. Absolutely.
Why aren't we manufacturing things? I'm sure we do. I know we do, but it's not on the scale in which at what they're doing. How many AI companies? How many African Americans are out here leading in the area of artificial intelligence?
Yeah.
Are out here leading in the area of insurance or healthcare or finance or any of that? I don't understand. We have the same mechanisms available to us, but we are only participating in them from the standpoint of labor. In other words, we are a monoculture of labor. We're just a bunch of wage slaves.
Labor and consumption.
Yes.
No. And this has been going on for what, hundreds of years, the stock market?
Yeah.
Oh yeah.
And
well, we used to be the commodity traded on the market.
oh
Yeah.
yeah, oh yeah, up there in New York. Oh yeah.
Yeah.
Yeah. Yeah, they used to have us out there. Matter of fact, that was the beginning of it.
Yeah,
Right.
exactly.
Well, and then they made us all commodities.
There you go. And we still are commodities.
We absolutely are.
Even the best and the brightest of us.
That's right.
Okay, so Michelle, to answer, I knew you were going to be aware, some of us were going to be overwhelmed. That's why I limited. I didn't want to go into everything that I could have went in because going forward, we're going to take each one of those one at a time. Okay, and go into more detail. Now, having said that, that doesn't preclude you from going out there looking at those YouTube videos.
Yeah.
And it's really just a matter of asking the right
Questions. Yeah.
Yes.
And even with that, you need to validate what you're looking at, because some of these guys are they're
Yeah.
not gonna know what they're talking about. They're not gonna give you the full picture because then you're competing with them. And then number two, just that little bit of information I've given you guys today about setting your platform up in real time. That right there is gonna put you in a real good position, because some people are trading and they anticipate to get one price, and when they go to execute it, the price has already dropped because the price that they saw was delayed.
Right.
Okay, so going forward, we're gonna get we're gonna go. My perspective is always to start from the big picture or the macro level, and then to proceed to the micro level. We're going to get to the nitty gritty stuff. Like each one of those patterns we can take in turn. Okay. We're going to talk about fundamentals. It isn't just going to be strictly candlestick patterns, technical analysis. To me, we need to know about the fundamentals. In other words, that's the money. We need to get behind that company to see if it has good management. There's matrix or metrics we can use to tell if the company is well managed. We can look at the sales. We can look at earnings per share estimates if they're being revised upwards. There's all kinds of tools that we can use to inform our trading, okay? And like I say, a lot of this stuff I pay for, I'm just going to give it to you guys because, Robert, I'm hoping, my hope is that we can get more people involved with this, and then we can develop our own investor class, our own class of capitalists that can then turn around and do large residential developments, as an example.
Absolutely.
Other large corporations that we can hire and then be competitive and capture some of the market, some of those markets, like say, for example, hair care. It's embarrassing that we don't control the hair care market.
Absolutely.
For ourselves.
Absolutely.
That is embarrassing. Okay.
Mm-hmm.
Does anyone have any other questions? I don't want, like I said, we're a little bit over. I don't want to
Hey,
you guys too
Yeah.
much.
I don't, but I'm gonna go. I got to get out of here. But once again, thanks, and we'll talk soon, man. And good to meet everyone. I'm Robert, by the way.
Good to meet you.
Absolutely.
good class there, Marlon. Appreciate it. This Andrew.
Thank you, Andrew. Thank you.
It's I kind of stuck in there because I was trying to take care of some other things though, but everything you gave was straight knowledge, and it's kind of like one of those things I make in my comment though. A lot of people want to talk the talk, but they don't want to walk the walk and get the knowledge and the execution part. I mean, it's like you giving out a free information. Look how many people you have present.
Yeah, that's true, but I don't really care about that.
I'm with you on that wholeheartedly. Cause you know you and I talk, we'll talk offline though. But I appreciate you sharing your knowledge.
Yeah.
And cause I'm I'm trying to get all I can.
Well, hopefully what happens over time is it's like I used to always tell my students, first week, it was always a matter of trust.
Mm-hmm.
It was about learning. Yeah, that's on them, but really to learn is also that trust. I used to tell them all the time, if you don't trust me, you're not going to pay attention to me, and you're going to be given to your own devices. i.e. you're gonna do what you've always done, and you're not gonna learn anything. Okay? Everything that I'm giving you guys here, you can go out and validate. Okay? Now the experiential part, you know, hey, it is what it is. I've been doing this a while, and like I say, I'm a technical guy. I don't trade on sentiment alone. My intuition, I don't have it. So I have to have a point at which I can make a decision, and it has to be more than one point. Okay. Generally, I'm going to start with the fundamentals, and I'm only going to deal with companies that are in particular industries. Who wants to take a guess? What industry am I heavily trading in? Michelle, take a guess. I bet you can tell me what industry I'm trading in.
AI.
Yes, ma'am.
Yeah. Yeah, I was gonna specifically say I know Tesla in that way, but yeah.
I got all of them. I got Amazon, I got Tesla, I got NVIDIA. I'm gonna
Apple.
throw this Nikon in there only because of the information I've just received. But yeah, I got Arista Networks. I can give them all to you now. Because see, there's research out there too that says that sometimes, what you call that, what is that saying? A rising tide, what?
Lifts all boats.
Lifts all boats. Sometimes you just gotta be in the right industry.
That's right.
Mhm.
And your boat is gonna get lifted too. So, hey, the Magnificent Seven is important. There's some other ones that aren't in that group, but I'm around that computers and technology. And the more you're in the AI, especially as a heavy hitter, the more I'm going to be looking at you. I'm going to make money when you go up, and I'm also going to make money when you go down, because you're not going to always go up. I'll show you. I'm not here today, but I'll do an allocation. I'm going to call it an allocation. And I'm open to some of the things you guys too. I know I'm not the only one here that, has experience in trading. I'm looking to perfect what it is I'm doing. And so this is going to be interactive as well. Now, I will say that, as you guys probably could suspect, I love teaching. But let me tell you why I love teaching. Because I love learning.
Yeah.
And you want to know the best way to learn?
Teach.
Is to teach.
Mm-hmm.
You're forced. You're forced. You guys are forcing me to learn this stuff. All right, there's no other questions. I'm going to go ahead and let you guys go. On the next one, I'm going to try to do one of these every week. The next one we're going to get into are the technical indicators.
Okay.
Okay.
Okay, so especially for those of you that are swing traders or day traders, and I don't know if any of you are, those are going to be important. They're important for the long term too, but they're especially going to be important if you're a short-term trader. All right, see you guys on the next go round.
All right,
Okay.
thanks a lot.
Have a good afternoon.
Ma'am.